We're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us. It's being accepted. I mean, it's not. We've got 9 home builders in addition to our manufactured housing operation, which is the largest in the country. So we really do a lot of housing. And the costs are just up, up, up. Steel costs just every day. There hasn't yet been, because the wage stuff follows. The UAW writes a 3-year contract. We got a 3-year contract. But if you're buying steel at General Motors, you're paying more every day. It's an economy, and we weren't expecting it. All our companies, when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened up. And they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either, and we'll wait for 3 months or something of the sort. But the backlog grows. And then we thought it would end when the $600 payments ended around August of last year. It just kept going. It keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas. And it just won't stop. People have money in their pocket and pay higher prices, and carpet prices go up in a month or two. We announced a price increase for April. Our costs are going up. Supply chains all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel. So the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit for a year practically, and that means that the dry cleaner nurse just went out of business. I mean, nobody's bringing in suits in to get dry cleaned. Nobody's bringing in white shirts. Small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, it is not a price-sensitive economy right now in the least. Quite a bit more inflation going on than people would have anticipated. We're seeing, if you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now the question is what interest rates do over time. There's a view of what interest rates will be based in the yield curve out to 30 years and so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing a fiscal basis while following a monetary policy of something close to zero interest rates. And it is enormously pleasant. But in economics, there's one thing always to remember. You can never do one thing. You always have to say, and then what? And we're sending out huge sums. The president said it on Wednesday, 85% of the people, we're going to get a $1,400 check, or 85%. And a couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums. And so far, we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better, and people who are lending money don't feel very good. But it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy. And we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very big way. There are consequences to everything in economics. That is why the Googles and the Apples, when we don't own Google, we don't own Microsoft, they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money. If you're trying to find bonds that gush out more money from the federal government, we got $100 billion that's gushing out, like, $30 or $40 million a year, or whatever it may be, depending on the short-term rates. So that puts the pressure on, which is exactly, of course, what the monetary authorities want. They're pushing the economy and they're doing it in Europe, even more extreme. And they're pushing, and we're aiding it with fiscal policy, and people feel good, and people have become numb to numbers. Trillions don't mean anything to anybody. And $1,400 does mean something to them. So we'll see where it all leads. But Charlie and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we, Charlie?
Yes, and the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to be modest about. And that's exactly what's happened to the professional economists. So confident about everything. It turns out the world is more complicated than they thought.
Keynes said it many years ago that it's an invisible tax that only one man in a million really understands, and it's a tax on people that have had faith in their currency that the government's issued. The best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents. If you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. The best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting. In the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world. But actually, it's worked out pretty well, so I have no complaints.